This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, June 6, 2016. Euro dollar. So a sharp move higher in the euro after the market stalled out around 111, though ultimately this rally is viewed as corrective while the market holds below the 114 area on a close basis. At this point, you can see here that the market continues to mostly chop around, but is showing signs of topping out after stalling out by those 2016 highs at 116.17. So right now we're back to the middle of a range, but again, given the latest breakdown that we've seen off those 116.17 highs, the structure does favor additional downside over the coming days. So look for the rally again to be well capped ahead of 114 on a daily close basis. Really only a close back above 114 would delay this outlook, this bearish outlook, and put the pressure potentially back on a retest of the 116.17 2016 high. Sterling dollar. So cable remains under pressure with this market once again stalling out into key resistance ahead of 148 and pulling back towards now key support, which comes in around 143 to 143.33. Look for a break below 143 to open the door for fresh downside towards a retest of psychological barriers at 140, which guard against that 7-year low at 138.36 from earlier this year. At this point, any rallies again should be very well capped now ahead of 146, with only a break back above 147.70 to negate the current bearish outlook for sterling dollar. Dollar yen. So dollar yen continues to trade within a well-defined downtrend, with the market recently stalling out ahead of that previous lower top at 111.89 to put in potentially the next lower top now at 111.45 ahead of the next downside extension below this recent multi-month and 2016 low at 105.55. A break below 105.55 could open the door for that downside extension to extend all the way down to psychological barriers at 100. In the interim, any rally should be very well capped now ahead of 109.50, again with only a break back above 111.89 to really compromise the bearish outlook for dollar yen. Euro Swiss. So Euro Swiss continues to trade with an overall constructive tone. The market is putting in a series of higher lows and higher highs, moving up towards a retest of that multi-month high and yearly high at 112 further up. Look for a break above 111.30 to strengthen this prospect, while any setback should be very well supported ahead of 109.55. Aussie dollar. So Aussie has seen a nice little surge in recent trade after basing out by multi-day lows at 71.45. But again, the market remains confined to a broader downtrend, and any rallies are viewed as corrective, with any rallies seen very well capped into some previous support now to resistance around 74.15. Look for a break back up below that 71.45 level to open the door for an acceleration and retest of the 2016 base at 68.27 further down. At this point, only a close back above 75 would really delay the immediate bearish outlook. Dollar CAD. So despite some setbacks in recent trade in dollar CAD, while the market holds above 127.72, there is risk for a formation of a major base with a higher low sought out ahead of the next upside extension beyond 31.89. This would then expose a move towards 135 further up. But again, overall, this market is showing signs of a major base off those 124.61 2016 and multi-month lows, and so while we hold above 27.72, setbacks could be supported ahead of the next major upside extension and continuation of the confirmation of this major base. Kiwi dollar. So Kiwi has rallied all the way back up towards 70, but once again rallies have stalled out ahead of 70 into the 70 area, and overall, while the market holds below that 2016 high 70.54 and ahead of 71, any rally should continue to be very well capped. Look for another topside failure now ahead of 70 in favor of the next downside extension below those recent lows at 66.75, which would open a move towards 65.46, which would then guard against that 2016 base at 63.47 further down. At this point, only a close back above 70 would delay the immediate outlook, while a break above 70.54 would be required to officially negate any bearish structure here. SPX 500. So the S&P 500 has rallied back above 2100 in recent trade, though ultimately the market continues to show signs of being a little bit exhausted on rallies above 2100. If the market stalls out again up here and breaks back down below Friday's low, which came in around 2084, this would do a good job of strengthening another bearish outlook and the potential for a top in favor of an acceleration back down towards critical support in the 2020 area. Ultimately, a break below 2020 would be required to really get the prospect for a top going and accelerate declines potentially all the way back down to the 2016 low. But for now, while the market holds up above and around 2100, there is still risk if the market establishes back above the 2016 high at 2112 for a retest of that record high from 2015 at 2133. Gold. So gold continues to show just how well it is supported on dips, despite those latest pullbacks that we've seen, those intense pullbacks after the market stalled out above 1300, down all the way towards 1200. The market remains propped ahead of that previous resistance now turned support in the 1190 area. Ultimately, while the market holds above 1190, this consolidation, this price action is viewed as a bullish consolidation, ahead of which should eventually be a fresh upside extension beyond the 2015 peak at 1307 and towards 1400 further up.